Hello, hello, hello. Time for another diversification masterclass. And sure, it is a properly hot day here in Africa. So we've got the fans going and we're going to have some fun. So today is Human Rights Day in South Africa. It's a public holiday. Obviously, we're a global company. We've got members in 178 countries. So for many other people, it's just a standard Thursday morning. However, what I wanted to rock and roll with today was to share with you the diversification masterclass. So if I just go here and before I share my screen, do you know that on Sunday, it was 20 years. It was my birthday, 20 years for the company. We started on the 17th of March, 2004. And in those 20 years, we've learned a lot of things. We've made a lot of mistakes. We've learned how to find the right partners. We've learned how to not go with the wrong partners, and what I'm going to share with you now, you'd have to be a bit of an idiot not to spot patterns. If you were watching, investors from 178 countries over 20 years invest over $1 billion, you would have to be a bit of an idiot not to spot patterns and to actually see what is going on through the process. And so what I'm about to share with you is 20 years worth of knowledge, and hopefully I can help you save a huge amount of time and a huge amount of money. So what are we going to do today? Well, it's all about the diversification masterclass. And it's the 5 important lessons learned from the wealthiest and most sophisticated investors. So the question before we get started, and let's get in the room, where are you? Where are you coming from? It's always interesting to see, I'm always fascinated where people are coming from. So let me know in the chat room where you are coming from. Come on, let's engage. Let's get the people in the room. Let's find out what's happening. So we got from South Africa, we got Cape Town, Johannesburg, Durban, Fourways. Sure, lots of South Africans today taking advantage of the public holiday. Where else? Cape Town, Imgeleni, Ireland, south of England, southwest, Kimberley, Santon. Awesome. Okay, well, the question, and I always like to start with a question. What would it mean to you in 12 months or less to be earning 5K passive income without any hassle or complexity? What would that mean to you? Just type in the chat box, or if you don't want to share it with others, just think about it. Freedom, life-changing, freedom. It'll change my life. My second question is, how would you like a system which will statistically help you get there 5 times faster, safer, and simpler? So 5 times faster, simpler, and safer. So not only can you get passive income, but secondly, you want a system that can help you get there 5 times safer, simpler, and faster, statistically. Yep. A couple of people want it. The rest of you, should we sign off? I know how to do it. I've been doing it for years. Okay, let's rock and roll. So I want to introduce you to 2 people. The first one is Jordan. And Jordan is a high net worth. He's 55 years of age. He's worked very hard in his life. He wants to build a portfolio to ensure his wealth is preserved. This is what Jordan wants. He wants to build a globally diversified passive income of at least $5,000 a month, $10,000 a month, or $25,000 a month, simply and safely. He wants to diversify his investments between countries, currencies, and assets. He wants to use his limited time to get effective results with predictability. He wants to save decades of frustration and millions of dollars to get the right knowledge for him and his family. He wants wealth protection, a plan B, and peace of mind. He wants to be held accountable with an accountability partner to get results. He wants to have a family office to help him manage all his financial affairs. He wants to create generational wealth for his family. He wants to have a fully completed, executed wealth plan and investor strategy sheet. And he wants to get results. Now, just a matter of interest, who here resonates with Jordan? If you do resonate with Jordan, just type in the chat box, Jordan. If this is someone that you resonate with, not only possibly who they are, but what their needs are, what their wants are. What about someone else? Victoria. Victoria is an entrepreneur in her 50s, devoted to her family and business, aiming to build generational wealth. She wants, despite, she's very busy, so despite a packed schedule, she seeks a streamlined investment strategy that empowers her to make wise decisions, aligns with her goals, and frees up time for her grandchildren and daughters. She wants to understand the investment landscape, so she feels empowered to make the right decisions for herself and her family. And Victoria focuses on achieving financial freedom to cherish more moments with her loved ones. Now, who here resonates with Victoria? Just type in there, Victoria. And if you resonate with both Jordan and Victoria, then, I'm happy if you want to write them both down. At the end of the day, these are two avatars that we've helped. And we've helped hundreds of people like this. In fact, over 4,000 people we've helped that are like this achieve their objectives. And so if these are your objectives, then I highly recommend that you strap yourself in for the next 90 minutes while I share with you how we've helped others do it. And if we can help others do it, then I fundamentally believe that we can help you do it in terms of that process. So what is this all about? Well, it's living a life unlimited. And how do we do it? Well, in our opinion, you do it through Diversification 5.0. Now, there's a little link here, and you can literally go to it, and I'm sure Shane will put the link in the chat box. But if you want to understand what your investment goals are and what you would like to achieve this year, we've created a questionnaire where you can literally go in and fill in the questionnaire, and it'll guide you and help you know what your next steps are. So in terms of what your goals should be for the year, what will hold you back? What are you trying to achieve, etc. So if you literally go to this link, diversificationmasterclass.com/discover. And Shane, I just want to check, are you there? Can you whip that up into the chat box?
Yep, put it in now.
Awesome. So yeah, if you want to go and fill that in, then it'll give you a good indication of kind of where you're at and what your goals are. So I want to start with a story. If you've seen me present before, most of you will know that I love to talk in stories because I think people learn a lot more from stories. So there were two brothers. The first brother was living in Zimbabwe. It was 1976. In those days, it was called Rhodesia. And basically didn't have a plan. There was political uncertainty and violence, and decided to leave the country. So 1976, got in a car, I think this is a Renault, and drove from Zimbabwe down to Durban. And the problem was, was very reactive. So had to get a job in South Africa and was very much reactive his whole life, both politically, economically, socially. And I'll talk a little bit more about that story later. But in simple terms, a very reactive person without a plan. That was like a cork on the ocean, depending on what was happening in the local economies. The second brother was very proactive. So in 1980, he decided that he wasn't going to leave Zimbabwe, but that he was going to start investing offshore. So he started investing in international assets and started to earn an international income from those assets. And in 2003, he decided that it was time to immigrate to Australia. Now, most people say you can't immigrate to Australia after the age of 50. Well, he did. He bought his way into Australia at the age of 53, and he bought a house in Brisbane, for cash. He sent his son to one of the top private schools in Brisbane, and his son subsequently went on to row at some of the best universities in the world. And also, what I believe, and most importantly, is he never had to actually work for an Australian. I don't think there's anything worse than when you build up your career and suddenly you have to go backwards in life and work for someone else in terms of that process. So my question is, which one of the brothers do you want to be? Do you want to be proactive, or do you want to be reactive? Do you want to be the first brother that was very reactive and basically just had to kind of improvise no matter what happened in the economy and the political and social environment? Or do you want to be proactive and have the freedom of choice and be able to make decisions based on your needs, your wants, and what you want? So Kahiso says proactive. What about the rest of you? Do you want to be reactive or do you want to be proactive? And please notice, there's no such thing as a get-rich-quick scheme. You know, the proactive brother, it took 23 years worth of planning to give him the ability to make those decisions. So the reactive brother happened to be my father. And this was me with my dad. I was 13 years old and I was on my very first property project with him. And we were actually renovating our house and building a double bedroom bathroom onto the house. And the interesting thing with my father is I learned at a very young age, he did everything that he was told to do. He went to school, he went to university, he worked really hard, he got a great degree, he got a great job, he became financial director of a listed company, he invested, he paid his taxes, and yet when he died at the age of 59, he died broke. And I looked at it at a very young age and I was like, well, this is ridiculous. I don't understand. You know, my dad did what we were all told to do. Go to school, go to university, get a great degree, work hard, invest, you know, et cetera, et cetera. And yet when I did the research, and I learned this from Dr. Hannes Dreyer, 94% of people in England, Australia, and America will follow my father at the age of 65. They'll either be dead, broke, or reliant on the government. 5% of people will be financially independent. And a lot of people go, yeah, I want to be financially independent, until they realize that they actually are earning 25% less than their last paycheck. 25% less. I call that financially trapped, which means that only 1% of people are actually finishing the race. 1%. So 100 of us start the race, and only one of us is actually finishing the race. And so at a very young age, I went, that's ridiculous. It just can't work like that. So I went out and I read this book, and I'm sure many of you have read the books, Rich Dad, Poor Dad, you know, and, you know, all about the cash flow quadrants, the E, the B, the S, and the I. And what was really interesting is that when you go into this in more detail, you know, you've got the employee, which is all about active income, hard work, no security, no time. Then you've got the self-employed person, large debts, insufficient funds, and stress. And this is 95% of the world's population, 95% of the wealth. And then on the other side, you've got passive income. You've got the business owner, easy work, stability, spare time. And you've got the investor, no debts, plenty of money, and freedom. And that's 5% of people and 90% of the world's wealth. And the question we should all be asking ourselves is, how do we get to this investor? So I don't care if you're a beginner or, you know, highly sophisticated, because even if you're highly sophisticated in your local market, how do you become a global citizen and be able to earn globally diversified passive income? So myth number one is a lesson that I learned myself. Because, you know, I went out and I read all these books, Rich Dad, Poor Dad, Think and Grow Rich, you know, Real Estate Riches, Master the Money Game, you know, hundreds and hundreds of books. And I went on courses and I got degrees. I've got an honors degree and a master's degree in property cum laude. I've got CRS out of America, which is Certified Residential Specialist, which is the top out of America for residential. I've got AIPP out of England, which is the Association of International Property Professionals. I got PDP out of South Africa, which comes from the UCT business, the MBA division in terms of property development program. And I went out and I learned from, you know, all of the people everyone knows, Dr. Dolph DeRoos, Hannes Dreyer, Kurt Coetzee, you name them, all of them. And the myth was, for 14 years, I thought I had to do it all myself. I thought I had to learn everything myself. I thought I had to do it all myself. And what was really interesting is that I realized there was another way. I realized that for all of us, most of us out there, we're trying to do it all ourselves. We literally learning and going on courses and finding mentors and trying to do it all ourselves. And then I realized 14 years ago, or sorry, realized after 14 years, it was 2010 that I realized this, where I realized there was another way. I could do it through partnership. I could be far more effective with a lot less risk by doing it through partnership. And I'm going to share that with you today in terms of that process. So where did it all start? Well, this I've already shown you was my first project when I was 13. I then went and did my first development in Cape Town when I was 22 years old. I bought a house and converted it into 6 townhouses. I did my first London property when I was 24 years old. We bought this terrace property here in Wimbledon. We then went on to start a company, which is what I told you. It was our 20th birthday on Sunday, where we helped thousands of people invest in South African property, hundreds in London property, hundreds in Australian property, and hundreds in American property. And what I realized over those years was that the problem is that we were in residential property, and that's the mom and pop investors. And, you know, everyone was trying to invest like mom and pops. And it's really what middle class and professional people do, investing in residential houses or apartments. And I realized that the 99% were not investing like the top 1%. They were not getting the same results as the wealthiest people. They were limited to in-country deals. There were massive barriers and hassles to getting into commercial, let alone international real estate. And there was a lot of complexity when it came to tax and structuring and you know, banking and all of that sort of stuff. And so literally we looked at it, and there was a lot of pain that was created in 2008, 2009 for me, because what happened was, you know, in those days before that, we were just helping people invest in apartments on their own. But when the crash happened, there was a significant opportunity to buy whole buildings. In this case, a great developer in London called Barratt Homes, we could buy 48 units cash, but we could buy them at a 40% discount. And what was interesting, I sent an email to all my investors, and I said, listen, it's a 40% discount. It's an 8% yield, which in London is like unheard of. It's cash flow positive. It's fully tenanted, fully furnished. And I literally said here at the bottom, I don't care what happens to the market values in the short term. This represents a real opportunity. Now, we could have bought those for £160,000 each. How much do you think they're worth today? Take a guess. Chuck it in the chat box. We could have bought them for £160,000 each. What do you think they're worth today? Mandy, you got it right. So it's about 750. That's exactly right. So the first person up got it right. Well done. So it's about 750. That's exactly the right number. So you would have, the money would have literally 3 to 4 times what you bought it for, and probably closer to 4. And what's fascinating is that, you know, it was kind of a no-brainer to me, as I put in my email. But the challenge is that we needed $10 million. And so I ran around to all our investors, and I just couldn't get them to move fast enough. And so we lost the deal. And then in 2009, I was in Bondi Beach in Sydney, and I met 2 very wealthy investors. And I said, what are you investing in? We're in the heart of the crash. And they said, well, we're investing in medical buildings. And I said, why medical? And they said, well, think about it. No matter what happens in the global economy, people need doctors. Secondly, doctors never leave their premises. And thirdly, doctors, you know, are very good at being doctors, but they don't, you know, they're not accountants. They sign very good long-term favorable leases. So I remember thinking again, well, with all my degrees and all my courses, this is a bit of a no-brainer. You know, how do I participate? And they said, well, we're raising $40 million. We've got 8 tranches of $5 million each. And, you know, do you want to participate? So again, I ran around to all my investors. I couldn't get them to participate. And those 2 examples created so much pain that in 2010, we actually started Migrate. It took us 4 years to get the compliance and the tech sorted. And we did our first medical building in 2014, where it was a $16 million deal. Investors from 82 countries around the world invested. We bought 6 different buildings, and we were away to the races. And for the last 10 years, we've basically been doing commercial property. And then from 2019, we started doing the other alternative assets. So what's our track record? Well, we now got members from 178 countries. We've invested over $1.3 billion. We've had over $100 million go through the platform, and $30 million paid out in dividends and exits in terms of the overall process. So you're not the first person that's coming and learning how to do this. Whether you want to invest in America, England, Europe, Australia, or South Africa, that's what we've helped people do for the last 10 years. And when I look at it, why investors diversify, the number one reason I believe is that they want to preserve their wealth. They've worked hard for their money and they want to look after it. The second is they want a plan B. They don't want to be tied up in one country, one currency, one asset class, or even one partner. They want peace of mind. They want to know that no matter what happens in the world, they've got a solid and robust strategy. And finally, often they want freedom. They want the freedom of choice. I mean, we live in crazy times. You've got the Ukraine war and it's kicking off again. We've got inflation hitting 40-year highs. We've got inflation and interest rates going up. We've got fuel costs going up. We've got the stock market down. There's load shedding in South Africa. And if it wasn't all hard enough, then you've got Israel and Hamas at war as well. And so for us, that's why we talk about diversification 5.0, because we live in very interesting times with a lot of uncertainty. And in these type of times, this is when you focus on diversification. You can learn this from some of the wealthiest people in the world as to what they do. And I'm going to share those trends now with you. Over the last 20 plus years, we built a model where we believe that to be a global citizen, you need to have globally diversified passive income. So globally diversified passive income. How do you do that? Well, you diversify across countries, currencies, assets, partners, and time. So you diversify across countries, currencies, assets, partners, and time. And just before I get started, there's a whole bunch of you online from all over the place. Try not to be one of those people who 10 years from now comes to me and says, oh, Scott, I watched a webinar with you on, Human Rights Day 10 years ago. I wish I'd done something. Because I've been doing this now. I've been on stage for 20 years. 2004 was the first time I was on stage. And I got so many pictures of people all over the world, live presentations, webinars, and they all come up to me and go, I wish I'd done it 10 years ago. I wish I'd done it 12 years ago. And so really, it's important not to be one of these people who experiences the pain of not taking action. Presenting with some of the best in the world, going away to game reserves with wealthy high net worths and having conversations and private game lodges and webinars with Neil Peterson and Clem Sunter and Dr. Dolph DeRuis. And it's all about the pain of not taking action. What's interesting, according to Harvard, if you listen today, literally in 3 months' time, you won't even remember 10% of what I'm going to teach you. 10%. If you work within a like-minded group, you're probably going to retain somewhere between 30 to 65%. But if you work in like a closed kind of mastermind group where someone's actually holding your hand and it's non-directive and you're actually learning while doing, you're going to retain 95%. And our whole philosophy here is to empower you. Our whole philosophy here is to share the knowledge so that you're empowered and you can do it for you and your family in terms of that process. I shared a video yesterday about the pain of not taking action. And I showed a gentleman, he asked for the ROI. And I said, well, what are the returns you're getting? And he said, well, he's getting an average of about 7% through a big money market fund. I didn't even bother to say, well, that's just in rands and therefore you're getting diversified as well. I said, well, if you can get an average of 14 or 15% and you take a 10-year term, that's going to equate in today's money to about $57,000 of value to you. And the question I have for people is that it might sound good, but you also need to focus on the pain of not taking action. People move 4 times more away from pain than they do towards pleasure. 4 times more away from pain than they do towards pleasure. And so, do the maths. Your future self will thank you for making the right decisions now that you can experience the results 10 years from now. I'm going to talk a little bit later about the mastermind and what it's all about and how it actually works. And I will share with you how you can actually achieve your results 5 times quicker, simpler, and safer, where myself and Alex and our family office, Calio, will actually hold your hand to help you get the results. So it's time to share with you the 5 trends. Now, having done this for 20 plus years, these are the 5 most important things that we've learned from the most sophisticated investors as to what they do in uncertain times. So it's trends, risk, diversification, structure, and team. Are you ready to get into it? Give me a thumbs up, say yes or no. I just want to see if you're still paying attention. Are you on emails, social media, watching Netflix, or are you focusing on your future self? Okay, I can see a couple of hands up. Let's rock and roll. So trends. This is a really interesting one because, you know, when I wrote my book, James Painter actually wrote the entire chapter 2, which is all about currencies. And James comes in and deals with our mastermind members every now and again. And he talks a lot about trends, and he talks about the stock market and where the stock market was going. And he uses a thing called trend analysis. I've been working with him for about 15 years. And it's phenomenal, the results that he gets in terms of, you know, he uses the Elliott wave system in terms of the long-term trends. And what I found fascinating is that he looked at the stock market and it could lose anywhere from, you know, 80 to 85% over the next 5 to 10 years. That's something we should all be paying a lot of attention to in terms of, you know, where to from here. So, like I said to you in my book, Property Going Global, I talk about all the trends. I talk about where to find the right information so that you can do that trend analysis. And if you want that book, Property Going Global, just type in there Property Going Global or PGG, and we'll give you a free copy of my book, Property Going Global. The best person for trends, though, is a guy called Ray Dalio. So I highly, highly recommend that you go and check out Ray Dalio. And what Ray Dalio, you know, talks about is you got growth on the left-hand side, and you got time on the bottom. And you basically got productivity in the middle. So this is over time. And what you can see here is you got the short-term trends. So you got the short-term debt cycle, which is sort of 5 to 8 years. And then you've got the long-term debt cycle, which is 75 to 100 years. Then you've also got the political, the economic, and the social trends. And what's fascinating is that this time, right now, in the year of 2024, kind of between 2020 and 2030, all of these trends are intersecting. We're sitting right here. So you've got the short-term debt cycles intersecting, the long-term debt cycles. You've got social, economic, and political all intersecting all at the same time, which is why it's leading to so much mayhem and uncertainty in the markets. If you want to know more about this, the book that I would recommend is Principles, or you can go on LinkedIn and you can read all about it. Or you can type in there Ray Dalio, and I will share with you a masterclass that I did. It's a 90-minute masterclass where I went and researched his book. His book is 19 hours long to start off with. I went and looked at all his LinkedIn profiles and his second book that's on LinkedIn. And I literally put all of the information into a 90-minute masterclass so that you could understand. What I love about it is he's gone back 500 years, 500 years, and looked at all the trends, and then future-proofed us to actually help make the right decisions going forward. So if you're interested in that, go to Ray Dalio, because I believe he's the best in the world when it comes to these trends. So let's look at, just some learning lessons. When we had the big crash back in 2008, 2009, everyone was panicking. And what I learned is that, again, it's all about cycles and trends. So what happens to people in the short term is that they panic because they see prices do this. So in London, property prices lost 20% in 12 months, and everyone went, oh my word, panic, panic, panic. And yet what's interesting is that you should be looking at the trends. So if you knew what was happening in London property, the demand was way outstripping the supply. And therefore, even though there was the market went down for 12 months by 20%, it actually recovered within 12 months and has risen almost ever since. And that's because the fundamentals, the long-term trends of demand were outstripping supply. It's just an example. Let me give you a real life example. This was a building called City Peninsula. We had 26 investors that invested alongside me in this building. And this gentleman, Don, invested in 4 units at £313,000 each. We got a 26% discount off the developer. And he got, once the development was finished in 2011, he got positive cash flow rental the entire time for 10 years. In 2021, he sold all 4 units and he made £1 million per property. So he bought it for £313,000 and he sold it for £1 million. I mean, who here would like to buy a property for £313,000 and sell it for over £1 million and get the positive rental the entire time? So people say, I'm sure, are going, oh, well, it sounds too good to be true. Well, not really. If you go and do the research, Night Dragon is investing £8.4 billion or $10.3 billion into the Greenwich Peninsula. There's 17,500 homes, roughly 84,000 square meters of commercial and retail, 20,000 square meters of cultural attractions, hotels, etc. And I mean, this article came out in 2022. Now, why this is important is because Canary Wharf is the new financial capital of England. And they just put a tube station in at the Jubilee line, which they built a station at Greenwich Peninsula, and our building was just there. So we rode the wave. Our investors and myself rode the wave of all of these trends that were taking place over the 10 years, which is why that growth was above average in terms of that process. Another example was Ryan Border. He came to me in 2009, and he said he wants to invest in Australian property. And so he bought 5 properties in Australia, and he didn't buy a property he wants to live in. He bought where the market trends were showing him where to go. So he bought in Brisbane and Melbourne, and he bought, typical mom and pop, 4-bedroom, 2-bathroom Australian homes, middle-class Australian homes. And what was interesting is that they were the best performing sector, not just in Australia, but in the world in 2009, 2010, 2011. So they were the best performing sector in the G20 during that time. And so again, he rode that trend, and 5 or 6 years later, he sold those properties, he moved to Australia, and he bought a house on the Gold Coast, and he lives there happily to this day. Another example is Michael and Lee Honeysett. In February of 2013, Michael came on a buyer's trip, and I'll never forget, to America. He was very, very specific. He wanted to build passive income so that his daughters, and he had a very specific number, and he wanted his daughters to be able to, they were teenagers at the time, but he wanted them to be able to study anywhere they wanted, and also to be able to work and live wherever they wanted. And I'll never forget, he was really nervous up front. He was probably like many of you, sounds too good to be true. I don't want to put my money down. And I'll never forget, he negotiated on the buyer's trip. I mean, it was just a deposit to come on the buyer's trip, and he negotiated on the price. And I was a bit like, dude, we're going to America to buy houses cash. Anyway, he came on the buyer's trip. He built trust and confidence through meeting the partners, getting the right information, and he invested. And I'm super proud that 10 years later, him and his family have moved to England. His daughters are there. They're studying, they've been able to study where they want, and they're now living and working where they want. And he's achieved his objective. And he literally sent me a message. And he said, when I joined, it was the best money I've ever spent. He then went on to go again to say it would never have happened if I tried to do it myself. And so these are just learning lessons that you and I can learn from others that have already achieved these results. And finally, if you want to look at trend analysis, in my book, Property Going Global, I literally went into all the countries, England, Australia, America, and 16 other countries, on where do you get the right information. And if you look here, we started investing in Australia in late 2008, and we rode this boom. In England, we rode this boom, and then we were out the market, and we started again somewhere around here. And in America, we got it virtually perfect. We literally got it right at the bottom of the market. Now, if you get it right once, then you're lucky. But if you get it right 2 or 3 times, then you probably are looking at the right trends with the right facts, the right fundamentals, and the right systems. And this becomes really, really important. And then in our digital course, the digital upgrade, which we call Wealth Going Global, I actually take people through where to find all the latest information so that you can do this trend analysis yourself. The final thing on trends, and this comes from the SEC in America, which is the regulator in America. If you look at the stock market over the last 25 years, it's got an average return of about 8%, whereas private equity's got an average return of about 12%. What's quite scary is that the stock market actually has higher risk than the private equity market. So again, we're told to go, high risk, high return. It's rubbish. Wealthy people are investing in assets with low risk, high return. It's complete opposite of what we're taught. And we've averaged for the last 10 years, 14% IRR return over the last 10 years. So I spoke a little bit about Wealth Going Global. This is the digital course that you can literally go in. and you can get the power of clarity. So what are your 5 whys? Why do you want to achieve this? Then it's the top 5 countries that you want to invest in, the top 5 currencies. That's actually run by James Painter. The top 15 assets that you should be investing in, how to find the right partners, and reduce the risk and avoid the mistakes that 80% of people make. At time, how do you build a wealth plan over time? And finally, how do you use technology to bring it all together? And if I just show you quickly, it's literally a digital course. You can go in, you can do all of it. So you can literally go in and learn all about, the different countries. You've got all the different materials. Here's all the different links, etc. Same for currencies, assets, partners, and time. And what's so cool at the end is if you do your homework through, there's 6 different modules. You literally click on download your certificate, and you literally get a personalized wealth plan. So why do you want to invest? How are you going to invest? What do you need to do? So few people have this. Investor strategy report. Where am I going to invest in the world? What are the asset classes I want to invest in? What are the countries I want to invest in? And you actually have your own personalized investor strategy report with the countries, the currencies, and the top 15 assets to invest in. So, Shane, my partner, has built this. It's literally a home study course that you can, go through yourself. But it is important to understand that what I'm sharing today is merely the tip of the iceberg. There's so much substance below the iceberg. And that's why things like Wealth Going Global have been built to give you that substance in terms of this process. We've also invited Clem Sunter. So again, you can go read all of Clem Sunter's books, Think and Grow Rich, and you can read all his different course material, etc. But I'm a big believer in just learning directly from the person. So we got him in and we interviewed him. He's one of the top 5 strategists in the world. And we literally asked him, what are your scenarios for the global economy? What are the flags that we need to know? What are the probabilities? We went through all of that, and we actually included that into Wealth Going Global so that people had access to all of that knowledge in terms of their scenario and strategy planning. Number 2 is risk. So number 1 is trends. Number 2 is risk. So I learned this from my uncle, and it was really interesting because in 2008, 2009, again, the world was falling apart. And I remember Barclays Bank was falling apart. And my uncle had his money in Barclays Bank. And I remember talking to him and saying, well, what are you doing? What are you investing in? And he said, Coca-Cola. I said, why Coca-Cola, Bill? And he said, well, because I'm diversified, because Coca-Cola is in over 100 countries. They got multiple products. They pay a very good income stream every year. And I was like, wow, okay, that's really interesting. And then a couple of years later, I read a book called Snowball, which is all about Warren Buffett. And Warren Buffett owns about 15% of Coca-Cola. And what I found fascinating was it was the same reasons my uncle invested. He had diversification, but most importantly, he had income. And what I realized was that the middle class and professionals try and chase capital growth. They want to invest in houses for capital growth. They want to invest in Bitcoin for capital growth. They want to invest in shares for capital growth. It's a mom and pop mentality to investing. The wealthiest investors invest for income. And the more they focus on income, the more they manage risk. I learned this the first time myself back in 2002. So I bought this property in London with a friend of mine, and all our friends were trying to buy fancy apartments on the hill. And I also remember that they were saying to us that we're absolutely crazy. If you look at this date, it was March 2002. England was going to war with Afghanistan. Interest rates were going up. Inflation rates were going up, etc. It sounds very similar to today. And I said to my friend, well, what about if we buy this property? And what about if we renovate it and put a conservatory on? Effectively, we're changing a 3-bedroom house into a 5-bedroom house. And what I found really interesting was that by doing that, we took the income to having over £1,000 cash flow positive per month. And that allowed us to manage our risk, because no matter what happened with interest rates, we could ride the storm in terms of that process. And so we learned this ourselves. Funny enough, our friends went and bought those fancy apartments for capital growth. And in 2007, 2008, when the market crashed, they lost a lot of capital value and they didn't have the income, whereas we just had the income all the way through the process. And then I learned it again with the medical centers. because in America, the residential market in 2009, 2010, 2011, some of the markets dropped by 40 to 70%. Vegas lost 70%. Imagine owning a house for £1 million or $1 million, and it goes down to $300,000. That's what happened in Las Vegas. And yet the medical centers just continued to pay all the way through. And that's when I really started to learn about the power of passive income and predictable income and how it helps you manage risk and ride the storm. And more recently, this building we invested with Feldman right in the heart of COVID. We bought this in December 2020. And while everyone else was running away from office, we went in with our partners. They've been doing this for 42 years or something. They manage over $3 billion. And I don't know why my phone is, I just want to check my phone because it should be on not disturb. So I don't know why these calls are coming through. Anyway, long story short, right in the heart of COVID, the income return was about 9%. And, they've been paying every quarter, since then, basically. So it's another example of focusing on income to make sure that you're getting the result. So here's an example, a lady called Hilda. She came on a buyer's trip with us back in 2013. She started investing in 2014 in commercial property in America. She built up a nice passive income while living in South Africa in commercial property in America. And in 2019, 2020, she was able to move to America, and her passive income allowed her to stabilize herself and get going in America. And what was interesting is that I managed to get her invited to Necker Island. So this was me and her on Necker Island with Richard Branson. And her commercial properties were actually paying for her lifestyle so that she was able to go on trips like this. And again, the power of income and this passive income that we're talking about. So the third one is diversification. Now, I've spoken really highly of Ray Dalio, and he says the single most important component to financial success. Now, just to put in perspective, this gentleman manages $160 billion, $160 billion. And over the last 40 years, he's managed to achieve about a 21% return. That's pretty phenomenal. So over 40 years, on average, he's returned 21% a year on average. Obviously, it goes up and down, but on average, 21%. What do you think he says is the single most important component to financial success? Come on, let's engage the brains. I'm not seeing anyone. Diversification, spreading your risk, cash flow. So the single most important component to financial success, diversification. He says you need to diversify across assets, within assets, across markets and currencies, and across time. And again, this is the book that I've already spoken to you about in terms of principles. And what's really interesting is in this book, so Tony Robbins got really irritated in 2009, 2010, because 10 million middle-class Americans lost their money. And so he went out and he interviewed 50 of the wealthiest people in the world. And when he did this, he said to Ray Dalio, come on, why don't you share your secret? You've got a 21% return across 40 years. Why don't you share your secret with people? And Ray Dalio was like, no, but that's our intellectual property. And he said, look, you're 75 years old. Come on, give back to humanity. And so he finally did. And in that book, he shared the formula. And he said, you need 50 uncorrelated bets in an attractive array of assets that don't move in tandem. That'll reduce the risk by 80% and increase the risk-return ratio by a factor of 5. And it's at this point that most people's brains just switch off. They go, that sounds like a lot of gobbledygook. And what's interesting is that that's what the financial industry kind of wants you to think, because they kind of want to disempower you, make you feel stupid, and not want you to feel empowered to go and get the results. But what it's actually saying is you're going to make 15 quality investments, 15 quality investments that are not tied together. That's all it's saying. You need to make 15 quality investments that are not tied together. If you do that, you'll reduce your risk by 80% and you'll increase your return by a factor of 5. Now just put in there yes or no if you would like to reduce your risk by 80% and increase your return by a factor of 5. Reduce your risk by 80% and increase your return by a factor of 5. You know what's so simple? I'm a big believer in life. We don't have to figure it all out ourselves. We can literally copy. And what do you need to copy? 15 quality assets that don't move in tandem. That's it. That's the magic formula. 15 quality assets that don't move in tandem. Here's what he had to say on a TED Talk.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So if you want to, it's a TED Talk, you can go check it out yourself. It's around the 26th minute. It says diversify well in a balanced way. You need to know how to diversify your assets in countries, currencies, in assets, countries, and currencies. Knowing how to diversify your wealth is the single most important thing. I want to share with you some mistakes I see around diversification. So the first one is I meet people. I met a doctor, a year or two ago, and he said, oh no, his financial advisor said he must pay down his house in Johannesburg. And I was like, okay, well, that's interesting advice when you consider that the rand has devalued against the dollar by 6% year on year for the last 40 years. 6% year on year for the last 40 years. So you must pay down your house in Johannesburg in a depreciating asset. Then it gets even better because I meet people all the time and they're like, no, but I'm buying off-plan developments and I'm buying new developments and I'm buying apartments and I'm going to get amazing capital growth. And I go, okay, well, firstly, if you've ever owned apartments in South Africa, you'll often find that the rent doesn't cover the expenses. So you end up putting money into the property. You're hoping for capital growth, but the rand is devaluing against the US dollar. And what I found from my own experiences, you might sell it with capital growth 10 years later. I mean, I had a building in Cape Town where, I sold it. I bought it for 500. I sold it for $1 million. And I thought I was a hero until I did the maths. And I realized, well, I'm paying about 2,000 to 2,500 rand extra per month into the property. You multiply that by 12 months, it works out at close on $50,000, 50,000 rand a year. If I hold it for 10 years, that's 500,000 rand. So I've made no money. I'm literally, the capital growth I'm getting back is just the money I've put in. But now I still have to pay capital gains tax and it's in a depreciating asset. When I put it like that, it's kind of stupid. When you look at the global wealth index, which I talk a lot about in Property Going Global, and I also talk about it in Wealth Going Global, we literally went out and did the research. And if you look, the buying power, and by the way, this is not just a South African thing, you can do it for any country or any currency, but it's basically a basket of goods to determine whether what's your buying power. And if you take the rand to the dollar, our buying power across the dollar, the pound, and the Australian dollar has devalued by 92% over the last 40 years. 92%. I want to give you another personal example. So I bought this house in Teeson Island in Knysna, which is one of the top 5 estates in the country. And I thought I was a hero, very proud of it. I was the youngest person to own it by 20 years. And when I sold it, again, I thought I was a hero because I bought it for 5.5 million rand and I sold it for 14 million rand. So it looked like a huge profit. In fact, a return of 161% over that time. But then I did the maths, and if I do it in rands, Okay, I made 161%. But if I do it in dollars, literally taking into account the amount of money I put down as my deposit and the amount of money that I got out as profit based on the current exchange rates, I lost $22,000. So I lost money in dollars. And if you take that I could have got about an 8% average return over those 10 years, I then didn't just lose $22,000, I lost about $300,000, which is about 300%. And this is where it starts to get real. This is where you take emotion off the table and you just look at the numbers, the facts, and the figures, and you start to make proper decisions around what is best for you and your family going forward in terms of your investments. I'm not saying there's anything wrong with where you live. I live in South Africa. I choose to live here. I love living here. But the point is, where does your money live? And is it getting you a safe and predictable return? Mistake number 2 I see when it comes to diversification. Okay, don't worry, Scott. I'm going to diversify. I'm going to go to London and buy an apartment. Or I'm going to the one I'm hearing all the time at the moment. I'm going to Manchester or Liverpool, and I'm going to go and buy like these cheap properties, and they're going to get renovated. I've been there, done that, got the t-shirt. I've helped so many people do it, and it's a load of BS. Because now you've literally got, one tenant, one management agent, or one partner, one income stream. It's literally all stuck in one place. That's not diversification. That's all your eggs in one basket. What about number 3? I've got a friend of mine. Well, I've got a lot of investors who are in the same boat. They were investing with a company that goes through the Seychelles and focuses on medical buildings in America. And they thought they were diversifying. They were investing in one medical portfolio after the other. The problem is he's got 8 of these medical portfolios, and not one of them is paying a return. Because although they were in different deals, they were all with the same partner. So you basically are investing in one company, one team, one partner, one income stream, one asset class, one country, and one currency. Do you think Ray Dalio would tick that box? What about mistake number 4? Oh, well, I live in England or Australia or America. I basically, I don't need to diversify. Well, let's look at currency. In the last crash, people, think, oh, it's just a South African problem. No. Australia lost 46% against the dollar. The United Kingdom lost, over 40%. You are highly susceptible no matter where you live in the world if you don't take into account diversification. Ray Dalio lives in America, and he believes in diversification across countries and currencies. What about if you're in one asset class? If you hadn't just invested in American property in 2008, you would have felt like a class clown. I've already told you that it lost anywhere from, 40 to 70%, depending on the city you were in. Or what about Dr. Dolph de Roos that went around the world telling everyone how clever he was because he invested in commercial property in New Zealand? But the problem was they were all in Christchurch. And then there was an earthquake, and 8 of his buildings were condemned during the earthquake. He had insurance, so he went along to the insurers and said, you need to pay. And they said, no, it's an act of God. So the insurers didn't pay. The government condemned the building, and he still had the mortgage, and he went bankrupt. So the question I've got in terms of diversification is, if I take over the last 12 to 18 months, I personally have invested in 10 different asset classes, 4 continents, 5 currencies, 9 different asset classes, and 10 different partners. And that for me is what diversification 5.0 is all about. Anyone that says to me, well, it's not possible, it is possible. We're doing it every day. And I love Ray Dalio's philosophy of 15 quality assets that don't move in tandem. And the beauty is, in the old days, that might have felt impossible, or you needed a hell of a lot of money, or it would add a huge amount of complexity. I don't believe that's the case anymore. And if you want me to, I can show you how I do it a little bit later. I love to build portfolios for people. I love it where someone comes to me and says, look, I got $100,000 and, I'm looking for a blend of income and capital growth. And we build them a diversified portfolio. We show them what the strategies are as to what they can achieve, not just now, but over the next 10 to 20 years. And it helps make much better decisions around the big picture of where the world is going and how do you build globally diversified passive income. A good example of this is Chad Pope. You know, he came along in 2011 and started investing it with us in Australia. Then he pivoted in 2012, 2013 and started investing in commercial property in America. He subsequently bought structured notes to our platform in 2019. And he truly is, you know, someone living in South Africa. He truly is a global citizen where he's got peace of mind and that ultimate diversification in terms of that process. And then finally, you know, this is our family office partner, Calio Capital. And this is what they were talking about, diversification across asset classes.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return and is the fundamental building blocks of asset management and a financial plan that's going to, you know, produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
It's so interesting because this was a presentation they were doing to our mastermind, and 85% of your long-term returns by the time you're 65 will come down to your portfolio construction. Basically, how do you diversify across the different asset classes? We just spent this last weekend with our mastermind members in person with Anthony, going through the 6 pillars of wealth. And one of them was diversification and how you do this asset allocation. And he literally went through the different buckets, and it's their special formula on how do you achieve this diversification, you know, to get the right portfolio construction over time. To give you an example, if you take private equity, most people have never even heard of private equity as an investment class. So if you take the stock market, which is the dark blue, and you got private equity, you can see that over 5 years, 10 years, 15 years, or 20 years, private equity has outperformed the stock market. If you use this, which at the bottom here, you got risk, and on the left-hand side, you got return, you want to be in this top left corner, which is low risk, high return. And yet the problem is the majority of people, if they're just dealing with a typical financial planner, will be 30% in bonds, kind of 70% in stocks. That means that they're in high risk, low return. It's kind of ridiculous. And all you need is 20% private equity to dramatically change the results over a 25-year period. What about this? You know, if you take the average return over 20 years, the stock market's made about 9.5%. The investor trying to do it on their own has made about 3.6%. And then finally, in terms of return on investment, I told you earlier about the gentleman that was getting 7%, kind of just going through his typical financial broker. And I said, well, if you've got $12,000 and you can get a 14 or 15% return, what difference would that make to you in today's money? Over 1 year, it would only be about $440. It's really not worth it. But over 2 years, over 5 years, in today's money, it would be about $12,000. Now it starts to get meaningful. I mean, you're only investing $12,000. Over 10 years, it's $57,000. And over 30 years, it's a ridiculous number. It's close to $1 million. And this is where you start to really get a feel for time value of money. Finally, well, not finally, number 4, structure. So this is a really interesting one. A lot of people get caught up on analysis paralysis of tax and structuring. We spend a lot of time on this, and there's a huge myth where you've got to be very careful, where you go to financial planners and they stick you in the Seychelles or the BVI or Mauritius or the Cayman Islands, and they give you a box, and then they basically just try and sell you products in that box. And I've seen this movie so many times. I've set up my own structure 4 times. I've helped hundreds of people do structures, and generally, they just don't work because they boxes and they literally try and sell you into boxes, and they get paid, they're incentivized to sell you a box, and they also incentivized to sell you products in that box. So we work with Calio Capital here, our financial, our family planning, family office, to help do this. And what we do is we help people that are part of the mastermind. We help them come up with a bespoke solution. What do you need for your family so that you can optimize your current assets, you can get your tax and your structuring right? And what so many people don't understand is that unless you're investing kind of $2 to $3 million plus, it doesn't make sense to go and set up offshore structures. And often there's a good way to optimize it by doing it in your own name offshore. Now, there's no ways for me to stand on stage and teach tax and structuring when we've got people from 178 countries. But if that's something that's of interest to you, I highly, highly recommend that you reach out, you chat to me or Alex, type in their mastermind, because this is where it's important to create a bespoke solution for the assets that you've created. And if you want to be a global citizen, tax and structuring is materially important. But you also don't want to be like the lady that I met in 2013, 2014. She was given about 20 million Rand in inheritance. And when I met her in like 2018, 2019, she said, no, she hadn't done anything. And I was like, why haven't you done anything? And she said, well, I'm too scared. I don't know what structure to do in it. I don't know how to do the tax and structuring. And I was like, do you realize that in the 6 or 7 years you've sat on your money, the Rand is more than halved, literally more than halved. You could have put your money into anything, in obviously any quality asset. And even if you didn't have tax and structuring, you still would have been better off than you are sitting on your hands doing nothing. And that's a classic example of analysis paralysis. So, you know, what I'm saying in terms of the mastermind, it's not a retail product. It's specifically a bespoke solution. I see a number of people have put in their mastermind, but if you want a personalized solution with a family office that doesn't specialize in any one country, they specialize in helping you create a bespoke solution for what you and your family need, then I'd highly recommend that you type in their mastermind in terms of that process. And here's an example of someone, Manu. You know, Manu was a successful investor and he started investing and he actually lost $250,000. And what was really interesting is that, you know, people always say, oh, but I can't afford $5,000 or $10,000. And I'm like, well, can you afford not to? If you don't know what you're doing and you make mistakes like Manu did, you know, he lost $250,000. And, you know, he then found us at Migrate. We introduced him to the right people and he's been investing, you know, and so it's not only what you make, but it's also what you save in terms of the overall process, which becomes really, really important. So before we go to step 5, I want to ask a quick question. Often people at this stage are feeling overwhelmed, and I often get accused of, it's like drinking from a fire hose. And I love this little picture of the little girl in the water. So who here is feeling a little bit overwhelmed? You just say yes or no. It's a lot of information. I understand that. I've been doing this for 28 years, and I'm trying in, you know, pretty much an hour to share with you everything I've learned in 28 years in terms of the major trends. So I can see a lot of you saying that you're feeling overwhelmed, which is fine. I understand that. So I remind you of these avatars. Jordan, a high net worth, 55 years of old, you know, age, worked very hard and wants to protect his money. And all the things that Jordan was looking for. Globally diversified passive income, $5,000, $10,000, $25,000 a month, simply and safely. Diversifying his investments between countries, currencies, and assets. Using his limited time to get effective results with predictability. Saving decades of frustration and time to get the right knowledge for him and his family. Wealth protection, plan B, and peace of mind. Being accountable with an accountability partner to get results. Having a family office to help manage his affairs, like I've just been discussing. Creating generational wealth for his family, having a fully completed wealth plan and investor strategy sheet, and most importantly, getting results. You know, if you resonate with Jordan or Victoria, you know, she's an entrepreneur in her 50s, devoted to her family and business and wanting to build generational wealth. She's very, very busy. She wants a streamlined investment strategy that empowers her to make wise decisions, aligns with her goals, and frees up her time so that she can spend them with her grandchildren and daughters. She wants to understand the investment landscape so that she feels empowered to make the right decisions for herself and her family. And she's focusing on achieving financial freedom to cherish more moments with her loved ones. I asked you 3 questions up front. What would it mean to you in 12 months or less to be earning a passive income of $5,000 or more without any hassle or complexity? How would you like a system which will statistically help you get there 5 times faster, simpler, and safer? And lastly, a question I want to share with you now is, can I make you a quick offer to show you how you can do this simply and safely in the next 12 months. So you're feeling overwhelmed, you resonate with Victoria or Jordan, and I'm asking you if you would like a solution to help you do this simply and safely over the next 12 months. A couple of people are saying yes. To the rest of you, you can duck off. I'm joking. Okay, so a number of people are saying yes. So let me pivot into it. So I reminded you that we want to live a life unlimited, and it was all about diversification 5.0. How do we do it? Well, to become a global citizen, it's all about globally diversified passive income, and it's about diversifying across countries, currencies, assets, partners, and time. And the question I have for you is that I want to play a little bit of a game with you. So I'm going to ask you a direct question. Imagine you went to a doctor and the doctor said to you, you've got a serious medical condition. You have to lose 10 to 15 kilos as quickly as possible. Now, I hope this never happens to you. But again, let's just impersonate because I want to show you it's a very important point. So I remind you, the doctor said you've got a serious medical condition and you literally have to lose 10 to 15 kilos as quickly as possible, no matter what. Not I'll try my best, not maybe, no matter what. You've got two options. You can either go and buy a home study course, an exercise thing, and you wake up every morning and you put it on your laptop and you give it a go. Or you have a trainer, a coach that turns up every morning and knocks on your door at 5 a.m. and says, right, it's gym time. Which one would give you the confidence that you're going to get the results? Option one, the home study course, or option two, the coach? And it's a real life example to help you realize that if something's important in your life, what are you actually going to do? Not I want to, not maybe, not I should. It's a non-negotiable. It must happen. Which one is going to give you the confidence to get results? And I think we all agree that option two would be a lot more effective in helping us get those results. Now, the question I've got when it comes to your wealth, that was your health. But what about your wealth? What about if we had that same persistence and tenacity and drive around our wealth? What about if that's what we felt to build globally diversified passive income? Well, for some investors, the super experienced, sophisticated, or basically those that are just super confident and motivated, we've already got the solution. We've got what the doctor ordered. We've got the home study course. I always say to people, you need the right information and the right partners. So we built it. We got Wealth Going Global that literally gives you access to the right information. And we got Asset Mastery, which gives you access to all the partners. So again, all the different asset classes with all the top partners around the world so that you can learn. So if you want to go and do it yourself, in terms of a home study course, they exist. Literally, Wealth Going Global gives you the right information, and Asset Mastery gives you the right partners. We've proven for 2 decades that it works, but we've also realized that there might be a far better and more effective option in terms of that process, where you can work with me and the team to actually help you build your wealth system and your portfolio. And we figured out how to do it in a far more cost-effective way to help people get results. And in simple terms, it's just copying, how technology has done this in every other industry. Whether it's Uber to the taxi industry, whether it's Airbnb to the hotels, whether it's Netflix to Blockbuster, it's exactly the same. I've been doing this for over 20 years. And with our team, we've literally taken the best that I've learned from all the different coaching programs and masterminds that I've done, and listening to thousands of investors and saying, right, what do you want? How do we help you get results? And we realized that the investment space was broken. Just providing people with the knowledge and giving them access to invest doesn't work because most people don't do it. They get caught up, life gets in their way, and they don't get the results. And before they know it, they blink. I mean, we're already at the end of March. Before they know it, they blink. And it's the end of the year, and their goal of diversification and globally diversified passive income remains a dream rather than a result. So we fixed it. Again, we've got the right information and the right partners. But according to Harvard, if you have a coach, you'll be 400% better off in terms of getting results than if you try it on your own. 400% better off than if you try it on your own. And I found this little video. I've been part of masterminds since 2011. And I found this video which sums it up perfectly.
Now, this is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or a therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So now, what did he say there? You change 5 times faster in groups than you do with a one-to-one coach, consultant, or therapist. You need a collection of people together who are committed, all driven, and also want to make the right changes happen. And you give them a leader to follow who's willing to get in the trenches with them. And all of a sudden, you start finding real, rapid life and business transformation. Pretty cool, eh? So according to Harvard, 400% better off if you have a coach. And according to this, 5 times faster than if you've got a coach, which according to my maths is 20 times better off if you're part of a mastermind than if you're just in a coach. So I have a question for you. Most people are kind of caught here. This is your comfort zone. And the question I have for you is that if you get out of your comfort zone, this is where the magic happens. And my question is, are you ready to get out of your comfort zone, to start thinking like a global citizen, start building a wealth plan, and start focusing on building globally diversified passive income? And if so, that's why we created the mastermind. It's literally was created for people who want personal development. So they want to, believe in personal development, and they're coachable. They want to learn and grow. They've got a growth mindset. It's people who want passive income. So they want to build globally diversified passive income. And I say to people, it's, at least $5,000. And then it's for, people that have got started. They already own, possibly some property, or they're an investor in the stock market or something, but they've already got started on their journey. In simple terms, it's for people who want the fastest, safest, and simplest way to get there without any more hassle or complexity in their lives. Who's it not for? It's not for complete beginners. It's not for time wasters. It's not for people with no capital, and it's not for difficult personalities. At the end of the day, this is a journey that Alex and myself are going on with you, and we want to win together in terms of that process. This is the formula that we take people through. It's about building globally diversified passive income. It's about diversifying across countries, currencies, assets, partners, and time. And we built the mastermind with 5 simple steps. I'm a very big believer that simplicity is power. If there's 500 steps, no one's going to do it. But if there's 5 simple steps, then there's far more chance of achieving it. So step 1 is you do a one-to-one with me. So I'm a certified international coach. I sit down with you on a one-to-one basis, and we come up with your top 3 outcomes. What are you wanting to achieve? Step 2, we work with Calio. What's your starting point? What is your current portfolio? How do we optimize it? What is your tax and structuring? How do you basically take what you've got at the moment and optimize it? Step 3, you create a plan. You've got to get from, A to B. Well, you want to get here, and you're currently here. How do we get from A to B? Step 4, well, most people don't even have a plan. But if you do have a plan, most people don't execute on their plan. So then you run a monthly rhythm for 12 months to get the results. So it's about the accountability, the mindset, and the execution. And then finally, it's about the investment. So again, on a monthly basis, reviewing investments, learning about new investments, learning about new asset classes, investing, and getting results. 5 simple steps to achieve the objective. So let's look at them in a little bit more detail. Like I said to you, I'm a certified qualified coach through ThoughtSmiths. I'll take you through a one-to-one session. We'll get very clear on your top 3 outcomes plus your top 3 measures. And we write everything down. That's obviously critical. We use the lighthouse approach. Most people are caught up in problem and drama. It's low quality thinking. We get very clear on the outcome. So it's our lighthouse methodology. It's high quality thinking. We get very clear on what are the top 3 outcomes that you're wanting to achieve. And it was interesting. This is what one of our colleagues said when I did this process for a couple of weeks ago. So this gentleman was in Germany. He said, love the process. He's been a coach for 27 years. And this was his feedback. And this was the audio.
Hi, Scott. This is just a quick fan message. Just wanted to thank you again for our coaching call the other day. And then also wanted to thank you for the brilliant idea of that, sort of publicly putting in your goals in that Google Sheet. I see that the Google Sheet magically populated itself since the first time I saw it. And I must say the 2024 goals are very inspiring. And it's amazing to see. I found it incredibly supportive to see, people's just the amount of energy and the goals, and it's really inspiring. So just wanted to thank you for that. I really enjoyed reading everybody's goals. I haven't read all of them, but and somehow it's just really helpful. All right, well, have a fantastic day, and we'll see you in February. Bye.
So that's step 1. Step 2 is if you've got a personal property portfolio, we help you analyze your personal portfolio. So this gentleman had, 6 properties in England. The ones that were in orange were cash flow negative. They were costing him money. The ones in green were positive. The yellow one was his house. We showed him how he could rebalance his portfolio, sell off a few properties, and change his cash flow from a negative cash flow of £750 a month to a positive cash flow of £2,000 a month, which meant that he had $25,000 a year to invest, and he could get a far better return on that money. So it's a great example. I do this all the time with people that have properties in Johannesburg or Pretoria or Gauteng. I was like, right, well, I got these assets, but where are we at? Should I make decisions? Should I keep them? Should I sell them? Then you sit with Kelly, our family office. Traditionally, you need about $250 million to have a family office. Our family office manages about 65 families. They got about $600 million. And what God said, and the reason they partnered with us at the mastermind level, is the 1% can pay for the advice and get results. We need to support everyone else to get access to the same advice and results. And so they basically agreed to partner with us exclusively in the mastermind. And anyone that joins the mastermind works personally with the Calio team in terms of setting up their tax, their structures, optimizing their entire portfolio, whether it's their pension funds, their RAs, etc. And as Derek said, who's a farmer from the Northern Cape, he said, he spent 20, 30 years talking to financial advisors. He's never found the one solution, the one-stop solution. And he just loves working with them. His exact words were phenomenal. This was another person, Niels, and he had property in America. He had one in England. He had different investments all over the place and structures. And as he said, there was a huge amount of complexity. And he said to me, I think it's better for now to get one advisor for all asset class. We had so much duplication between the different advisors and investments. We also have to simplify admin, tax, and other structures for obvious reasons, but that'll take a while. And it took about 6 months, to be fair, just to manage the expectations. But he's now done it. And the peace of mind that he's got is phenomenal, knowing that he's optimized his entire portfolio. He's got his tax and structure in place, and he's got it all set up. So that's the starting point. Then it's about building your wealth plan. You know where you are. You know where you want to go. You know where you are. And it's about building a plan to get from A to B. And this is what we call the wealth plan. And the Calio team take it to a whole nother level in terms of sophistication. Then it's about the accountability, the mindset, and the execution. So most people find themselves in an away state, withdrawn, fearful, inability to make good choices, demotivated, etc. And the question is, how do you go in a toward state? Happy, ability to think clearly, creative, see new opportunities, etc. There's only 2 ways. The first is that you get in a like-minded group that are pulling in the same direction. And the second is that you get very, very clear on your outcomes. And so we take you through this mindset on a monthly basis. We work on, we got the 12-month mastermind. We've got modules like time management, mental wealth, flow. We've got an accountability tracker because it's about checking in every month and making sure that you're making measurable progress on, every single month in terms of the process. And an accountability coach. Alex and I work with people, plus you've got an accountability partner. Most successful people know that if they've got someone that's going to hold them to account, they've got a far better chance of getting results than anything else in this process. And then finally, the investment. We run a rhythm every month where, every month the Calio team turn up and they give us a market and currency analysis. They tell us what's happening in terms of the portfolio construction and the different asset classes. I love this. It's like a TED talk. So it's only 30 minutes a month. And they literally take us through, what do we need to know? What's happening in the Israeli conflict? What's happening with the Ukraine crisis? This happened literally yesterday. Where are we at in terms of the different asset classes? What's happening with inflation and interest rates? What decisions should I be making in terms of my asset class portfolio and et cetera? Then it's all about financial understanding. And this is where I bring in one partner to come and explain an asset class every single month. So we've done everything from multifamily, to structured notes, to industrial property. Yesterday, we did venture capital. Last month, we did crypto. The month before that, we did data centers. So we bring in the best partners around the world that can teach you about the different asset classes. And, if you take the feedback from people, mind-blowing, very valuable, extremely enlightening. I mean, this is an ongoing learning narrative to try and make sure that you're getting access to the best partners, the best knowledge, to make the best decisions for you and your family in terms of that process. And then finally, it's obviously about investing in deals and reviewing those deals. So 5 simple steps for the mastermind. I shared with you how to get there 5 times simpler, safer and quicker. Statistically, that's what it says. This is the 5 simple steps that we believe, and have been doing this now for over 18 months to help people get results for themselves. And then after 12 months, what do? You return to step 1. So I told you, according to Harvard, if you try to do it on your own 3 months from now, you won't even remember 10% of everything I've shared with you. But according to Harvard, if you're part of something like a mastermind, we hold your hand and you're actually doing it with us. So it's non-directive, you're being empowered. You've got a 95% chance of retaining the information and being empowered long-term. And it was interesting, this lady is out of Italy. So, we got people from all over, Abu Dhabi, Italy, Germany, Portugal, England, Australia, New Zealand, South Africa, Zimbabwe, Zambia, Swaziland. So it's a very global community. It's fantastic, a mixture of people. And Cynthia is actually a teacher. She lives in Italy. She's originally American, worked in Hong Kong and now lives in Italy. And we got a wonderful testimonial for her because people think, oh, it's all about having lots of money. It's not. She's a teacher. And she literally said, thank God for this mastermind, the partners it brings us, and the exponential learning curve you have gifted us. And she went from getting started to earning a passive income in under 3 months. So if you tell me that you want a passive income, it is possible. And she'd been sitting on her hands with analysis paralysis for years. So if you want the testimonial for Cynthia, the story of Cynthia, just type there Cynthia. And, she can literally, we'll send you the link to Cynthia so that you can see, just a real person, real story. Everyone always thinks you've got to have millions and millions of dollars to do this. You don't. Can learn from her and her benefits and experience of being part of the mastermind. And this is the video that we'll share with you. If you've typed in there Cynthia, we'll share it with you so that we can get it to you. So it's 2024. Wealth Going Global, the home study course. You'll get access to the countries, the currencies, the assets, the partners, and the time. So if you want a comprehensive home study course on how to, learn the top 5 countries to invest, top 5 currencies, top 15 assets, Ray Dalio, by the way, how to find the right partners and avoid 80% of the mistakes, and how to build a plan over time, then that's what Wealth Going Global is for. If you want to learn about all the different assets, and it's interesting because I've had highly sophisticated people come to me and go, oh, but I know about all the assets. No. If you want to meet all the top quality partners around the world and not only learn about the asset, but learn from the partner and see if it's the type of partner you want to invest alongside, then we've got asset class mastery. And just by the way, back to Wealth Going Global, we've had accountants, we've had auditors, we've had highly sophisticated investors, we've had businessmen, we've had farmers, we've had teachers, we've had builders, we've had plumbers, go through this. And, to date, we've only had raving feedback in terms of the knowledge. So if you're highly sophisticated, you will enjoy it. And if you're starting out, equally, we've built it so that you can understand it. And that's what we mean by the right information and the right partners. They exist. The home study is already there. We as a team had two choices when it came to the mastermind. We could charge $50,000 for the mastermind easily. Masterminds around the world, good masterminds go for $50,000. And we decided, we could easily charge $50,000, but we didn't want to charge $50,000 because our game is not to be a mastermind company. Our game is to help people invest and to get globally diversified passive income. And so we decided not to charge $50,000. We could easily charge $25,000. Again, I've been part of many masterminds where I've paid $25,000 a year. But again, we decided not to charge that because we wanted to make it affordable for people so they had money to invest in deals. We could charge $10,000. And again, overseas in England, Australia, America, you don't get out of bed for $10,000 in terms of a mastermind. And yet we decided not even to charge $10,000 in terms of that process because we wanted people to have capital to be able to invest directly in the deals. And our whole philosophy is alignment. We want people to be part of the mastermind and to build at least $5,000 in passive income as quickly as possible. And if they do that, then whatever they've invested to be part of the mastermind, everything else is upside in terms of that process. So I'm not going to charge you $10,000, but just imagine if I did charge you $10,000 and it helped you achieve your freedom goal. Would it be worth it? Yes or no? So if you invested $10,000 and it helped you achieve your freedom goal, would it be worth it? Yes or no? What about if it provided you with peace of mind for you and your family to know that you were secure? Would it be worth $10,000? Yes or no? What about if it helped you protect your wealth that you've created? Would it be worth $10,000? Yes or no? What about if it saved you a decade of time? If I take the mastermind members that were there this weekend, they've been trying to understand about wealth and diversification and, how to protect their wealth for decades. And yet they got such clarity just in a weekend. The feedback was phenomenal. Would that be worth $10,000 to you? And what about if it provided you with globally diversified passive income and thus peace of mind? Would that be worth $10,000 to you? So again, I come back to Michael Honeysett, and he literally had to invest $2,000 to come on a buyer's trip 10 years ago. And his goal was for his daughters and his family. And he literally said to me when I joined, it was the best money I ever spent. And that if I hadn't have done it, it would never have happened if I tried to do it myself. And the story I learned from Michael was that he negotiated with me on the price to come on the buyer's trip, and yet became a great friend and a great investor. And so the lesson we learned was try and make the mastermind as affordable as possible. I only want to deal with committed people, but those that are committed, like Michael, go on to do great things and get great results. And we're here to help people get, invest, to get passive income, to get results. And on the basis of that, we decided to make the mastermind as affordable as possible so that people could actually invest in deals and to build globally diversified passive income. The challenge we've got, it's a bespoke solution. You deal with me one-to-one, you deal with Alex one-to-one, you deal with the Calio team one-to-one. It's not, we can't do this mass market. So we can only deal with 5 people at a time. And because of that, we literally sit down and Alex and I interview people to make sure that there's the right fit. So if you're interested, if you typed in mastermind earlier, literally go to diversificationmastermind.com. I see Shane's put it up in the chat box. And what we're going to do is it's a 30-minute call. And during that call, we just want to understand, what are you trying to achieve? How can we help you achieve your goals? We then want to see, can we help you achieve your goals? What are you wanting to achieve? And can we help you achieve your goals? We want to identify the risks and your concerns, and we want to see if you qualify. And what I mean by qualifying is, firstly, we want to make sure that we want to understand what you're trying to achieve, and we want to make sure that we can help you achieve it. And secondly, we want to give you better information around what we do so that you've got the peace of mind to make sure that there's synergy and we can help you achieve your objectives in terms of the process. We only want to work with committed investors. And so, if you go to that link, you can book times in our diaries, but I do ask people to turn up on time. Only make an appointment if you're committed, because, at the end of the day, this is a journey we're going on. And if you're committed, we're committed. Our time is as valuable as your time. And, we're here to find the people that really have a burning desire to make this a reality. And we want to help them. We've helped lots of other people do it. And we fundamentally believe that we can help you do it. But I do say, unfortunately, there's only 5 spaces because there's only so much time that we can devote to the bespoke solution. I want to share with you, if you look at the returns, on investment, 344% from coaching and over 700%, others, businesses see it. If you want to look at what people say, you can literally go to that link, diversificationmastermind.com. You can go and read all the testimonials about what other people have to say, including you can go and watch the videos. So go and see what real people, real stories have to say. It might sound too good to be true to you, or go and see what others have done and what they've achieved. Some bonuses that we'll chuck in for you. Priority access to myself and the team, access to our tax and currency partners through Calio. You'll get access to asset class mastery for free. And that includes all the different asset classes, be it structured notes, multifamily, medical office, industrial. I mean, if I go here and show you asset class mastery, no, that's not the one I want to show you. Here it is here. And you can literally go through and you can see all the different asset classes, London residential. You can go and you can learn all about that asset class and the material. So there's a huge amount of substance that you can go into in terms of this process. And then you got Wealth Going Global. So you got access to everything that I've shared today with regards to Wealth Going Global. You got access to Clem Santa and the global scenarios and the South African scenarios. You've got a 12-month Wealth Hacker subscription. So again, that's all included. And that's everything from being part of the like-minded community to the wealth insights, to the knowledge and the digital courses, to the real people, real stories, to the wealth hacks, to the expert webinars, etc. You've got access to the best immigration agents, if that's what you're looking to do in terms of immigrating. If you want to come on the wealth weekends, we have these phenomenal weekends where we literally just finished one now in Stellenbosch. It was amazing. We got amazing feedback. And our next one's at the end of August. And then we're also doing bias trips where you can fly with me to America. You can come meet the partners on the ground. And the mastermind people get first access to that. So if that sounds of interest to you, then just go to diversificationmastermind.com and apply. Again, it's an application call. We want to understand what you're trying to achieve. It takes about 30 minutes. We identify your risks. We see if you qualify. We only want to work with committed investors. At the end of the day, if you qualify, we'll invite you. But ultimately, it's your choice. And it's about respecting each other's time. And unfortunately, we can only help 5 people in terms of that process. I want to share with you just some fun things. At the end of the day, you can take a horse to water, but you need to be committed. So we guarantee satisfaction between Alex, myself, and Shane. We really go out of our way to be accountability partners, to be accountability coaches, to whether you need the carrot or stick, whatever it takes to get the results. But the point being is that it's all about satisfaction. I remind you, if you want to think financially minded in terms of ROI, again, just with a paltry $12,000, if you take it over 1 year and you had a $5,000 investment, you got an ROI of about 9%. But over 5 years, you've got an ROI of about 250%. I sent you a video yesterday. How would your future self like to get an ROI, return on investment of 250%, literally in today's money? If you were going to invest $5,000 to make $12,000 today, it would be a bit of a no-brainer. Over 10 years, $5,000 to make $57,000. And over 30 years, it just gets really, really quite long. And I know that people say, oh, but this sounds too good to be true. No, it's not. When you do the right modeling, you get the right information, you get the right partners, you get access to the right deals, which we've consistently done for over 10 years, then you can significantly outperform what you're currently getting in terms of your process. And it also all starts with optimizing your current portfolio. So this is just some of the numbers that I've just taken you through in terms of the ROI. To show you some fun pictures, again, if you're interested, go to diversificationmastermind.com. I know that Alex has reached out to a few people, or they've reached out to Alex directly. And you can see here, this was when there's Michael there in New York in February 2013. This is us in Times Square. This is us with Dr. Dolph DeRoos, where we were actually buying. I paid $8,000 to go on this buyer's trip with Dr. Dolph DeRoos. And this was us buying properties on the steps of the auction houses during the crash of 2000, that whole last crash in America, having a bit of fun in the Grand Canyon, down the bottom of the Grand Canyon, going to see a show, buying houses in Atlanta, more houses in Atlanta. This is one of the houses Michael bought, learning with Ricky Jack, doing multifamily in Orlando, opening bank accounts. These are the old days where you had to go and do everything and open bank accounts and everything in between. Learning from partners on the ground so that you're getting the right information and the right partners, various different opportunities around the world, having a bit of fun on Beale Street, outside the New York Stock Exchange again, up in North Dakota, learning, having a bit of fun at the Oktoberfest. And what was really interesting, these are some of the wealthiest gentlemen in the shopping center game. They own over 200 shopping centers, and they knew that you don't fly over and just do deals. They knew that it happens all through partnership, which is why they came over and were part of our buyer's trip over 10 years ago. Why do we believe you should work with us? Well, there's many reasons people don't. Sounds too good to be true. I don't know how, too much compliance, the scams, ongoing management, difficult to invest. I don't have time, need the right structures, blah, blah, blah. In simple terms, it's I don't have the time, I don't have the knowledge, and I don't have the money. I don't have the time. The mastermind is being created for people that are time poor. It's for people that are business owners and entrepreneurs, and they've got jobs where they're time poor. And I always say to someone, if you don't have 3 hours a month, literally 3 hours a month, to help yourself become a global citizen and achieve globally diversified passive income and get the freedom you want, then no one can ever help you. So we've condensed time as much as possible to help you get the results. The knowledge, well, we give you access to the best information and the best partners. I'm not aware of a place out there where you can get access to a holistic view of knowledge so that you can truly make the right decisions for you and your family in a bespoke way. And then in terms of the money, I often say to people, can you afford not to do this? Do you want to do it all on your own and be like Manu and lose $250,000? Or do you want to do it with the right partners and get the right results as quickly, simply, and safely as possible? The final reason we think you should work with us is there's lots of other companies that are out there. They'll help you invest in structured notes. They'll help you invest in medical buildings in America. They'll help you invest in houses in Manchester. But there's no one to our knowledge that'll help you invest in all the top 15 asset classes and to have true, global diversification in terms of that process. What have I invested in masterminds myself? Because I know the value of these things. The first one, Singularity University with Peter Diamandis. I spent $14,000 a year. Roger Hamilton, I spent $25,000 a year. Mavericks, I spent $40,000, and that managed to get me to go, spend time with Richard Branson twice on Necker Island. And then Tony Robbins, I spent $50,000 a year to be part of his business mastery. So, I'm not telling you what doesn't work. I'm literally telling you what does work. I wouldn't have invested these amounts of money over and over again if I wasn't getting results in terms of this process. So let's move on to the final important, pillar, and it's team. At the moment, the way most people invest is it's you go to your financial advisor, you go through a financial institution, investment vehicle, and you invest. There's multiple middlemen all the way through the process. There's multiple fees. There's low trust, low transparency, and that's why people don't get the results. Or you could try to do it yourself. there's 16 different middlemen between you and your investment. And it's if you've ever invested in residential property locally, it's a real nightmare. If you try to do it internationally, it just goes to a whole nother level. If you want to do it yourself, these are all things you need to look at. Tax, structuring, onboarding, banks, investor reporting, KYC, KYB, AML, due diligence, country due diligence, etc. Or you can have 4 simple steps. Sign up for free, set up your account, browse and invest, and earn an income, effectively using technology to make it a lot simpler and safer. If I take our investment process, it's quite complicated. A lot of people say, well, I can do it all myself. Of course you can, if you want to. But like as Selwyn said, who's head of Callio Private Equity, and we're doing it, we just closed a deal in Manhattan with them before the end of last year. And now we're doing a deal in Germany with them. And literally, he said, there's no way, it's not even with all of his experience, that he's going to go to Germany and find a good deal. He goes to Germany and finds a good partner, and the good partner on the ground finds the good deals. And so, you can literally save yourself millions of dollars finding the right team and the right partners to help you get the right results. And then it's all about investment. There's multiple investments that are coming up for you to be able to invest and to be able to get the right results in terms of the process and how you actually do it, in terms of where we're at. I remind you of the family office. If you want someone to hold your hand and to provide you with that tax and structuring support, to look at your pension plan, to look at your RAs, to look at your annuities, to look at everything that your financial advisors around have recommended you on, your tax and your structuring, everything. To look at your holistic portfolio, then that's exactly why we partner with Callio, so that you can have a comprehensive wealth plan and you can have the peace of mind to go out there and get the results. And a good example of that was Alan. He came on buyers trips over 10 years ago. He partnered with us. He's now immigrating to America because he's been through the entire equation. He's been with us for 10 years, investing and learning and being on the investment committees. And now he's got the ability to move to America like he wanted to. And he was highly sophisticated to start off with. So if this all sounds too good to be true, if you want wealth protection, plan B, peace of mind, diversification, freedom, global citizen, empower your children, immigration, basically live life unlimited. We've helped 4,000 other people do it. If it interests you, go to diversificationmastermind.com. And between Alex and I, we'll see if you qualify and whether we can help literally hold your hand through this formula, helping you build globally diversified passive income, where you diversify across countries, currencies, assets, partners, and time. That's what the mastermind is all about. I remind you, there's 5 simple steps to help you get the results. What is your outcome? Where are you starting? How do we optimize where you're starting? How do we create a plan to get from A to B? How do we have the accountability, the mindset, and the execution to make sure it's happening every month? And how do we run the investment process to dramatically increase your knowledge and to be investing in deals through the process? I'm not going to go into all the details again, but reminding you that the outcome is the single most important thing to helping you get the results. Callio Capital helping you analyze exactly where you're at from a tax and structuring perspective, putting your wealth plan together to get from A to B. Then it's the accountability, the mindset, and the execution to keep you in a towards state, and all the tools that we use, including accountability partners to get the results, and the accountability tracker. And then finally, the investment and the rhythm that we've got between the market and currency analysis, the portfolio construction, the financial understanding, the investment, and finally the review. And it's all about tracking and making sure that it's sorted. And I think the feedback we've had from people is overwhelming in terms of the value that they're getting from it. So that's the mastermind, and a good understanding of how it all works. I remind you of what Harvard taught us. Again, if you try to do it on your own, you'll retain less than 10% of everything I've taught you today. If you do it in the likes of a mastermind, you're going to achieve 95%. You're going to be empowered to make the right decisions for you and your family. And if you want to look at return on investment, over a 5-year period, it becomes a bit of a no-brainer, 254%. I'm not giving you financial advice. I'm literally just sharing with you, what it means for someone, if they're doing and getting the right information and investing with the right partners. The bonuses, you get access to me and the team. You get access to tax and currency partners. You get access to asset class mastery and wealth going global. They're both thrown in for free, plus Clem Santo. the Wealth Hackers subscription, the best immigration agents, access to the wealth weekends, and access to the buyers trips in terms of the process. If it sounds that this is something that you'd like to do, if you typed in mastermind up above, I'd recommend that you go in, go to this link, diversificationmastermind.com, set up an application call, have a chat with Alex or I. As I said, we want to make sure that we're working with the right people. We need to understand what you're trying to achieve. We need to understand if you qualify. And the beauty is, if you have a call and you don't qualify, it's fine. We can often provide you with a solution. So there's no downside in terms of the process. And equally, you have a better understanding of who we are. And, the benefit is if there's synergy to help you get those results. Unfortunately, we do have a challenge. We can only onboard 5 people. I'll share with you some more pictures. This was us in Times Square with a different group at ice hockey, Madison Square, outside the New York Stock Exchange, buying commercial buildings in America, houses, having a bit of fun together, learning from the partners on the ground. At a bullfight, another commercial property we bought. This was Dr. Dolph DeRus and us sitting in an investment committee meeting. Paul Sherlando, we did 7 commercial properties with 7 commercial different investments with this gentleman. This was one of the buildings that we did a commercial opportunity. This was a buyer's trip we did in Hong Kong in the East. More commercial buildings that we invested in. And like I said to you, if you've picked up my passion over the last 90 odd minutes, I think you can safely say that we're going to do what it takes, carrot or stick, to help you get the results in terms of this overall process. Also, in terms of bonuses, I said to you that Alex, Shane, and myself would try and share as much value with you. So if you want to get access to the Ray Dalio webinar, to the Ray Dalio TED Talk, to Property Going Global, and I think, Shane, we can probably chuck in Cynthia there as well. Just go to diversificationmasterclass.com/bonus, and you'll get access to all of those bonuses for free. So, yeah, hopefully, and that will help you, in terms of value add for your time. In conclusion, there's an African proverb which I love. If you want to go fast, go alone. If you want to go far, go together. If you want to go fast, go alone. If you want to go far, go together. We started off today where I shared with you for 14 years that I tried to do it all on my own. And then I realized back in 2010, between 2010 and 2014, that I didn't have to do it all on my own. It was so much harder with so much more risk to try and do it all on my own. And by doing it in partnership, I could literally reduce the risk by 80%, and I could increase the return by a factor of 5. I repeat that. By doing it in partnership, I could reduce the risk by 80%, and I could increase the return by a factor of 5. And that's what this African proverb is saying. If you want to go fast, go alone. If you want to go buy houses in Pretoria or London, you can do it on your own. Go fast, go alone. But if you want to go far, then go together. And that's what I've learned all about through partnership. So I want to thank you for your time. As always, it's a wonderful privilege to share with you what we've learned in the last 28 years. I see a bunch of people, Josiah's put in their mastermind. If you can't figure out how to book a meeting, just chuck in their mastermind, and Alex or myself will reach out to you and set up a time that is convenient for you. I know Alex has reached out to a couple of people and asked them if they can share their number. I've just noticed in the chat box in terms of the process. If you've got any questions, let me know if I can help with anything in terms of the process. I'm very, very passionate about the space, learning from some of the wealthiest people over the last 20 plus years. There are patterns. There are these 5 pillars upon which people look at. I remind you, it's trends, it's income or risk. So it's trends, it's risk, it's diversification, it's tax and structuring, and it's your team. They are the 5 things which are going to fundamentally determine how successful you are in terms of this process. And hopefully today, if nothing else, I've shared with you both the knowledge and testimonials from others that have done it. And I've hopefully given you a way to show you how you can achieve it 5 times quicker, simpler, and safer. So any questions that I can help anyone with, Alex or Shane, anything I've missed out on or anything that you want me to add?
Just from our side, we will send out an email of this recording from today, and we'll also include the video with Cynthia.
Excellent. Okay, Shane. So thanks very much. So we'll send out a recording, the video recording and the testimonial with Cynthia. I highly recommend that if you even considering the mastermind, that you watch the testimonial with Cynthia, because I think it'll give you a very good insight into what's possible for you and your family. And yeah, I just want to see if there's any, Craig, no, we don't mention the price in terms of this. It's far better to have that conversation one-to-one in terms of the process. So at the end of the day, the mastermind is a bespoke solution. It's not for everybody. It's by invite only, and that's why we set up the one-to-ones. Just by the way, we had an incredible weekend this weekend with our mastermind clients or members in Cape Town. And some of the feedback we got from them was, wow, the energy in here is just amazing. It's so nice to be with like-minded people that are positive, that are all pulling in the same direction. You know, how did you make this happen? And the reason being is that it's by invite only. So we sit and we go through everyone. We make sure that we can help them achieve their objectives, but we also make sure that they've got the right energy to add value to the mastermind group. We've got the most incredible group. I've told you already, you know, Italy, Germany, Portugal, England, Australia, New Zealand, South Africa, Swaziland, Zimbabwe, Zambia, and a mixture of men and women, different ages. It's phenomenal, the group. It's one of the things I'm most grateful to be part of in my life. And, you know, we've got to protect that as well. So it's very important for us to get the right type of people in that are trying to achieve their objectives, and for us to make sure we can help them. And on that basis is why we set up the one-to-one. So my strong recommendation is get the one-to-one set up if it's something of interest to you. And thanks for all the kind words. I really appreciate that. Thanks for the birthday wishes for Sunday. Yeah, 20 years. The business has been going 20 years, which is quite exciting. And 28 years of doing it myself and 20 years of helping other people do it. So it's quite interesting in terms of that process. Alex, I'm not sure. I know you're typing. I know your internet wasn't great this morning, but if there's anything from your side, I don't know if you want to jump on.
Hi, Scott. No,
You
so
still
I
got your
still have
background you still got your background from the fireside chat we had with the mastermind members last night.
yeah, sorry about that. So no, I think I've been firing messages away here, trying to get numbers and just some dates in the diaries with a couple of people. And thank you for getting back to me. I see them getting back to me as we speak. So yeah, I appreciate that. And yeah, let's connect. Let's see where you guys are at a within our ecosystem, whether it's signing up to the platform or looking at our wealth, our home study courses, or the mastermind. Let's connect and see how we could really add value to you and get some results, because that's why we're here. And yeah, Scott, again, thank you very much for a great session. I think it's valuable.
Awesome. Well, yeah, thanks, Alex, and thanks for reaching out. And I think most importantly, on behalf of all the mastermind members, thanks for caring, because I know you kick butt to get results. So that's cool. Awesome. Okay, any other questions from anyone? I'm conscious that we've covered a lot of information. Wherever you are in the world, you know, today in South Africa, if you are in South Africa, enjoy Human Rights Day. I really want to congratulate you. Most of your mates are on holiday on the beach, you know, doing something, and you've decided to invest in yourself and your future self and your family. So really congratulations, pat yourself on the back. That's really quite an important thing. And yeah, if I don't have any other comments or questions, thank you for all the positive comments. Really, really appreciate it. Then I think I will wrap it up for today. So again, I leave you with a thought. You can do what I did, which is for 14 years, I can try and go and do it all on my own, or you can partner with people. You can reduce the risk by 80%, and you can increase the return by 5 times. You can literally go 5 times simpler and safer without any hassle and complexity. And like for me, it's kind of a no-brainer. Once I realized this, you know, from about 2014, 10 years ago, that I could reduce my risk by 80%, and I could increase my risk return ratio by a factor of 5 by partnering. I've literally just gone out with the intention to partner with the best in the world. And that's why we partner with Calio. That's why we created the mastermind, so that you have access to partner with the best in the world so that you can reduce your risk and you can increase your return by a factor of 5, and you can speed up your timeline in terms of that process. So yeah, have a wonderful day, and I'll see you next time. Cheers. Oh, and by the way, if you find this of value, or you think your friends would find it of value, please share it with them. You know, we're passionate and purposeful, and you know, we fundamentally believe that it's time to change people's mindsets of what's possible. Till next time. Cheers.